Alright, for this Form 8936 video, I want to go over a scenario where a taxpayer is claiming the qualified plug-in electric vehicle tax credit, and the vehicle that they're using has both a personal and a business use component. So most of the time when taxpayers purchase these cars, they're their personal vehicles, they're not using any of it for business. But in this context, we're going to have our taxpayer here, John Q. Taxpayer, buys a vehicle that he's using for business and personal reasons. And so if he wants to claim the tax credit, under those circumstances, he has to separate the tax credit between the business and personal use portion. All right, so I do have a full 8936 here with a complete 1040, so we'll go through all the pieces that John needs to be aware of when he's completing this form and claiming the credit. And then I do have one slide here covering some of the background on the credit itself, and then more details on the fact pattern. Now, I'm not going to go into too much detail on what kind of vehicles qualify, how to calculate the credit itself for each vehicle. I have other videos that go into more depth on those topics, so I'll put those links below in the description. If you want to go check those out first and then come back to this one, that would generally be best if you need some more context on the EV credit itself. So, again, the credit is completed and filed on this Form 8936, and the scenario we're going to work with here is 2022. Now, we want to be precise about 2022 because there's some different rules that change going forward. So in 2023 going forward, because of the Inflation Reduction Act, we have new standards, new rules, new issues to be mindful of. So this is just 2022. Now, when you claim the tax credit, whether it's for personal or business use, you have to reduce your basis in the property. Now, this is going to be especially important in the business context because you're going to see how it reduces the depreciable basis for depreciation expense, right? And so we'll look at that in a little more detail later. All right, so here's the fact pattern that we're going to be working with for John Taxpayer. So again, this is the 2022 tax year. John starts a lawn care and landscaping business, and he opens a disregarded single-member LLC, right? So he's the only owner, and it's treated as a disregarded entity for federal tax purposes. So he's going to be reporting all of the business income and loss on a Schedule C. Now, on August 1st, John purchased a 2022 Ford F-150 Lightning model truck. So this Lightning model is the full electric model, and it does qualify for the $7,500 vehicle tax credit. Now, John purchased this truck through his business, so it's titled under the LLC name, and he paid cash for it, so we don't have any financing to account for. Now, John uses the vehicle for both business and personal reasons. So he keeps a logbook, and he notes that, well, I drove a total of 10,000 miles for the year per the odometer. 4,000 based on my logs were business miles, 6,000 miles were personal. Now, what's also important to note here, for bonus depreciation in 2022, in order to claim bonus, you have to use the vehicle at least 50% for business use. He only used it 40% for business use, right, because 4,000 miles divided by 10,000 in total. So he doesn't get bonus depreciation, but he can still depreciate the vehicle, right? It's still a business use asset. He just has to be mindful of the variance between business and personal use. Now, what we're going to see when we look at the return is his federal income tax liability is going to be $4,914. That's his regular federal income tax. And so we're going to apply the personal portion of the credit to it, and then he's going to have some carryover from the business use, the general business credit portion of the EV credit. Now, this last part here, very important to highlight, and we'll get into this more detail when we look at the forms. But when you have a personal use EV credit, if you cannot use all of it in the current period, the remainder expires. There's no option to carry back or carry forward the credit. In contrast, there is the carry back and carry over for general business credits. And so what we're going to see when we look at the forms is that even though John wasn't able to use all of the general business credit portion of the EV credit, he can carry back the unused piece, and then to the extent it's not used, then carry it forward. All right? Okay, so let's have a look at the forms themselves, and we'll start going through some of these pieces here. So 8936. Part 1 is always completed whether we're doing personal or business use. So Part 1, the tentative credit amount, we have the 2022 Ford F-150 Lightning model. You have to enter the vehicle identification number, right, the VIN, and the date the vehicle was placed into service. So generally, this is going to be the day that you purchase and take the vehicle into your possession. If you purchase it on one day and then you come back a week later and take custody of it and drive it off the lot, well, it's the later date, right? It's the date you actually took the vehicle home for use. Now, it is not a two-wheeled vehicle, right? So we're not entering the cost of the vehicle here. With the amount that we are entering is the credit. So John went to the various websites to look up the amount of the credit, and he is eligible for a $7,500 credit for this type of vehicle in this year. The phase-out percentage, again, doesn't apply. Check out some of the previous videos where I go into that in more detail. But effectively, if you have a vehicle that's been on the market and sold a lot of units, and it starts to phase out the amount of credit you get. In this case, they haven't reached that threshold, so there's no phase out yet. So the tentative credit that John's going to be able to claim here is the $7,500. Now, here's where we get into splitting the credit for business or investment use and then the personal portion. In most cases, if you do not use your vehicle for business or investment purposes, as it notes above here, then Part 2 is completely blank, right? You don't have to complete it. If you have credit coming through from a pass-through entity, so a partnership or an S-corp, then you might have some amounts down here, right? So you could have an amount flowing through on line 13 from a partnership or an S-corp. But in most cases, personal use vehicles, you're just leaving this blank. But in this case, we do have some business use, so we're going to have to complete this form. Now, how do we get the 40% figure? The 40% figure, again, is being pulled from our actual business use of the vehicle. So if I go up here, let's look at John. This is John's Schedule C. So he's got his business, John Taxpayer, Fake Lawn Care Business LLC, disregarded entity. And so on his Schedule C, he is including the depreciation schedule 4562 to report the business use component of the vehicle and the depreciation. So if we jump down here to Part 5 where we have listed property, right? This is vehicles, automobiles, and other property used in the trade or business. We have on line 27, we've reported here our property use 50% or less in qualified business. There we have our 2022 Ford F-150, August 1st, placed in service. And then our business use investment percentage is 40%. And we're getting that number from after completing Section B. So if we look at Section B here, based on the miles, right? Total business miles, 4,000. Total other miles, 6. The total miles driven is 10. So 4,000 divided by 10 is our 40% business use. Now, what do we do with columns D and E? Now, notice here, column D, the cost or other basis is $32,000. Now, John paid the $39,500, right? That figure there. But when you claim this tax credit, you have to reduce your cost basis by the amount of credit that you're claiming. So that's why in our costs here, we're only reporting $32,000, not the $39,500 figure. So we have appropriately reduced our basis, and then our basis for depreciation is 40% of that figure. So 40% of $32,000 is $12,800, and so that's the amount that we depreciate over that 5-year recovery period. All right, so that's how we're getting the business use percentage, and that's how it's working on the depreciation schedule and on Schedule C. So now if we jump back to the credit amount, we can see here 40%, and then we multiply the credit amount up here, 4C, by 40%, and we get $3,000. So $3,000 is the piece of the credit that is attributed to the business. And this is important because that $3,000 is now recharacterized to a general business credit and reported on Form 3800. All right, so once Part 2 is completed, go down to Part 3, credit for personal use part of the vehicle. So line 15 is asking us, if we skip Part 2, enter that amount from 4C, so the full amount. If we did do Part 2, subtract line 6 from 4C, right? And if the vehicle has at least 4 wheels, leave lines 16, 17, blank and go to 18. So what we've done is we've taken our $7,500 credit, we've subtracted $3,000, which is business use, and we are left with $4,500 of personal use credit. All right. Now, once that's done, we get down here to lines 19 through 23. So the amount of personal use credit we have is $4,500. Now, line 20 is the amount of federal tax liability, regular federal income tax liability that we have on the return. So let me jump up really quickly to page 1 and 2 of his return. So we can see page 1 here, we've reported his income, we've taken the standard deduction. And so on line 16, the tax, the regular federal income tax that he owes, $4,914, that is the piece that is flowing through to the 8936. So if we look at the 8936 here, we've got his liability $4,914, and because line 20, the $4,914 is greater than the personal use credit, he is able to use all of this personal use credit to offset that tax liability, right? So the personal use part of the credit that was able to be leveraged, the full $4,500. And we can see that if we go down bear with me. We'll get to Schedule 3 here. Okay, so Schedule 3 is where we report the additional credits and payments, right? Part 1 is non-refundable credits. Part 2 are refundable credits and other payments. And so we can see here in Part 1, on line 6F, we've reported the qualified plug-in motor vehicle credit of $4,500. All right, so the personal use component has been taken care of. Now, what do we do with the general business use component? So, if we go back to the 8936, right, remember we have a $3,000 credit that is being applied as a general business credit. So the 3,800 is where you report those general business credits. We have Part 1, Part 2, and then Part 3 where we report the actual type of the credit. So if I skip through to Part 3 really quickly here. So Part 3 is where we list all the various types of credits that you might have available. So we have checked box A, right? This is a general business credit from a non-passive activity, right? So John actively participates in this business. He's the sole owner, so it is a non-passive activity to him. And then down here on line 1Y, right? 1Y, we have qualified plug-in electric drive motor vehicle credits from Form 8936, and we are reporting the $3,000 amount. All right, so now once we have our $3,000 amount, we have to figure out how much of the credit can we actually take. This is where we go back up to 3,800 page 1, so Part 1 and 2. So we have the general business credit of $3,000, and then in Part 2, we compute the allowable portion of the credit. So remember, the amount of federal income tax liability that he had was $4,914. Of the $4,914, the allowable credits that he's already taken, the personal use credits, are $4,500, right? That was the personal use portion of the electric vehicle tax credit, right? So $4,914 minus $4,500 leaves net income tax remaining of $414. So the $414, assuming none of these other fields here apply, which in John's circumstances they don't, he can use that $3,000 credit to offset $414 of tax. So when we look at the allowable credit computation here, what we're saying is, okay, remember, this is a non-refundable credit. So even though he's got $3,000 and it wipes out all the federal income tax, he can't get a refund for the excess. He has to just claim the $414, and that is, again, being reported up here on Schedule 3. So if I jump up quickly to Schedule 3, where we just were, we can see that there's our $4,500, there's the general business credit of $414, and so that total, the $4,914, is what is being used against his federal income tax liability. Now, here's what catches a lot of new vehicle owners off guard. These credits can only be used against your regular federal income tax liability and any AMT if you have it. All right, so the $4,914 has been completely wiped out by the EV credit, right? But notice down here on line 23, he has self-employment tax. Okay, so because he is self-employed, he's a Schedule C filer, he still owes the self-employment tax of $9,526, and so there's the total amount he owes because he didn't make any estimated payments. So if you have an EV credit, you cannot use it to offset self-employment tax. That is not permitted. You can only use it to offset taxes that you're otherwise going to see up here, right? So your regular federal income tax, and then any AMT that you might have, all right? So always, this is probably one of the top questions I always get is people think they're doing the calculation wrong because they still owe down here. And the answer is no, you probably did it right. You're just not accounting for the fact that you cannot offset self-employment tax with that EV credit. Now, last thing I want to touch on is what do you do with that excess credit from the general business credit, right? So $3,000 was the total. We used $414. The general business credit can be carried back or forward, right? So we used, so of the $3,000, we use $414. And so on this reconciliation schedule here, where we track the original credit amounts, the amount that was used, and the carryback or carry forwards, we can see down here on the 8936, our $3,000 was the original amount. We were allowed to use $414, and John is going to file a carryback claim for the remaining $2,586. And then to the extent not all of this is used, then John can carry forward to 2023 and then subsequent years, right, until the credit has been exhausted. Now, this is really, really important because, like I said earlier in the video, personal use portion of the EV credit cannot be used, it cannot carry forward or backwards if you cannot use all of it, right? And so that also burns a lot of taxpayers because what will happen if we look at the 8936, they'll get down here and then the amount of their taxes will be less than the amount of the personal use credit. So they can eliminate all the federal income tax, but any excess personal use credit is just lost, right? Again, you can't carry it back, you can't carry it forward. So it can be quite upsetting to see that, well, you thought you were going to get full use of this credit and you can't. Okay, so that covers it for this video. I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again on the next video. Thank you.